Good afternoon. It is Friday, the 18th of December, 2009. And let's go ahead and take a look at these markets here. First of all, the S&P 500, we did gap lower and continue a little bit lower here this morning, down towards the low end of the recent range at 109. Obviously, that's where we've been finding the recent support for the most part is down at just about 109 even. This morning's low is just above that level. Let me just get rid of this so we can see better. But this midpoint of the range yesterday, we had broken below and closed below that level, so it was back to looking for a test of the low end of the range, which we did end up getting today. So far, we've had a pretty choppy session, and we just broke down below the daily VWAP. We had been holding above it for most of the afternoon, that is. And I'm not expecting a major sell-off or anything here in the last half hour, so I think it's just going to go out pretty much in this area. Today is options expiration, and a lot of times the market will go out near a large open interest strike, such as the 110 level. So it's probably pretty dead to the close here. But we've got to look again at this 110.20 to 110.50 level as now being the level of resistance for this market, and support down at 109. It's just we're just trapped in this range still, and nothing is changing that so far. We've just it's been this is the 6th week that we've been in this range, and it's it's easy to complain that about the volume or about a range bound market or anything like that, but there have been good moves out there as well. I mean, some of these breakouts are holding really nicely and continuing to move in the individual stocks. And actually, some of the shorts are starting to work a little bit as well, which we haven't had too much of. That is success on the short side lately, because most of the stocks are in uptrends. The group that gets the most attention, obviously, that the most negative attention is the financials, and again, they look terrible. They just the daily time frame looks awful. The bigger level down here at about $13.80, $13 and $13.70 to $13.80. We've tested the $13.80 level a couple times over the last 3 months, and $13.70 was this low. So really breaking below there is what it's going to really have to take to get a fearful push lower. And if we were to get that, then I think we would start to target that 200-day moving average, which when we look at the weekly time frame here, we can see that's equal, of course, to the 40-week moving average. Let me just change that scaling. And in the 40-week moving average, or 200-day, is also now found near the highs of basically the first half of the year, and back in January as well, near that $13 level. So still no fearful sell-off yet. I think that if some of these bank stocks like Citigroup start to fall apart, and it's Citigroup was priced at $315, so far that secondary offering has been a success. I would bet that they come back down and test that $315 level again, but so far you have to look at it as a success. They had discounted the stock down, offered it at a lower price, and it seems to be, at least for now, holding. So as long as those bank stocks continue to individually hold up, you're not going to see a fearful breakdown in these financials. So I think we've still got some reason for continued just general optimism regarding the market overall. The S&P 500, again, we came down real close to testing that rising 50-day moving average again. That 50-day moving average, not that it matters the exact precise number because it's only a reference point, but it's at $109.10 right now. Today's low, 110 or 109.28. So again, don't look at that 50-day moving average as, hey, I'm going to stick in a bid at 109.10. Some people do, but they're just an inflection points, an area that gets a lot of attention, and a lot of times it does bring so much focus to the market at that level that you get less supply coming in. You get some more demand from people viewing it as a perceived bargain in that area. But I think you want to wait for more concrete reasons to buy. In other words, I don't like buying on weakness. Once the weakness is set in, and then the market starts to regain its footing, then maybe you want to buy long, but only when you have really except for very short term day trades. When you have trend alignment, and clearly here on the intermediate term time frame, we're back below declining 5-day moving average. We're below that midpoint of the range, and there's just nothing to be encouraged about on the over the last 6 weeks, other than you could say, the question becomes in here, and there's a lot of opinions flying around on Twitter and that saying that we're topping out, or that maybe we're just pausing for the next leg higher. The market will reveal itself to us, but for now, the path of least resistance on the longer term time frame is still higher. So you still have to give the benefit of the doubt to the buyers. Basically, the buyers are still in control of the longer term time frame, and that's what matters until we start breaking important support levels such as 109 and probably more importantly is 108. But again, we're not seeing the full-scale breakdowns in any of these, especially the vulnerable group such as the financials. The financials cracked this 1420 level yesterday and closed below it. Today we had just a little bit further weakness, but now we're right up against that level. I think it would be a pretty good victory for the bulls if they could close it above 1420, because that's today. That is in the next 23 minutes, because that has been an important near-term support level, and if they can get it back up above there, then it gives the bears something to think about a little bit over the weekend maybe. Of course, next week we have a holiday shortened week, and the week after that as well. I believe equities, I'm not sure, I believe equities close on Thursday, a half day, which would be 1 p.m. Eastern. And then we have the week after that, we have a 4-day week as well. So it's nice. There's two. If you're not taking days off, we do have 3.5-day weekends. 2 of them coming up, even if you're continuing to work through the holidays. But so the market is somewhat, continues to be somewhat resilient here. The semiconductors really hold up remarkably well, I think. A lot of people were looking at this group and saying, can't go any higher, it's at resistance, and it's finding some resistance here, but there's no law of technical analysis that says support broken will become resistance. It's a support broken tends to act as resistance, as the people who bought over here are looking to get out, and it becomes a self-fulfilling prophecy as well, as less people begin to buy in that area. They just become a little bit more cautious. More people offer their stock out from maybe from down here when this market first made these higher highs. But clearly the semiconductors are the stronger group in this market. I think the more important support level for this group is down at about 26.5. And we're starting to be more range bound, obviously, in here. But the good news about this range is that there's 2 ways that markets correct. They can either correct by pulling back and retracing, and then we start looking at Fibonacci and saying, okay, well, if we take a look at this rally and we then take a look at Fibonacci off that, we'd say, well, a 50% retracement would bring us to 26.12. It's actually interesting that from this rally here to the recent highs, 38% is right on this prior high here too. So that adds a little bit more credence to that level of 26.40 as being an important near-term level of potential support. So the market continues to just basically, I think, frustrate a lot of people, but it's holding on for the most part. Besides the financials, it's holding on for the most part to the gains that it's seen. You can see the SPY is starting to sell off a little bit, so perhaps my theory's wrong about that, but it broke down through this daily VWAP, found a little resistance there. If you're short, I'd say into the close, stop right up here, but that's for a very short-term trade. Back to the semiconductors. Semiconductors are still if they can get past this level, why wouldn't they be able to maybe get up towards $28, $29 a share? The Nasdaq is up 46 cents today, so we've got the Nasdaq up 1%. We've got the SPY down 0.75%, and the semis are up 1.5%. So the Nasdaq has been holding up better as well. I've been talking about the midpoint of basically the range for the that's not where I meant to draw that, for the Nasdaq, that's similar to the 110 20 to 110.50 level in the SPY, and that's the 43.80 level. This is kind of that midpoint for the recent range in the Nasdaq. And what we also see here is we have these higher lows in the Nasdaq as well, as we continue to rally up towards this high end, this 44.70 level. And if you look at what's happening here, is the time between, we've got two bullish things occurring here. And this is what this is what people call an ascending triangle. Forget about the name so much, but try to figure out what's occurring underneath the surface. So the market rallies from 41 to 44.70. It pulls back, and the buyers show up at 43 bucks a share. They figure that's sufficient enough lower prices that we're willing to step in and take the risk here, provide enough support for this market, that the buyers, excuse me, that we're going to take control. So the market, then more buyers come in, it rallies up to that 44.70 level, but more supply is released in this area. So that supply, that object in motion continues to move higher until it's met with the equal greater opposite force. The equal greater opposite force of supply halts the market in that area temporarily, and then the sellers come back in a little bit more aggressively and say, now this opposite force is stronger, so the market falls on the weight of more supply and less demand. This time, however, the buyers step up at 43.5, and they say, we're taking control in here. This is sufficient enough. I'm not waiting for a pullback to 43. I'm sticking my bid at 43.5. That's a good enough bargain. I'm impatient to own this. So they see that, it might have taken about, what is this, let's just call it 2 weeks for the first test of that 44.70 level. The buyers come in, it rallies back up towards here, and a week later, what we see is that level's tested once again. So the buyers are getting more aggressive by taking control at successively higher prices. That's the importance of these higher lows. What also shows us here is that the buyers are getting a little bit more impatient time-wise, because the test in between, the time in between the tests of that resistance are becoming shorter. So the buyers are getting more aggressive price-wise and time-wise. So what did we have? We had another pullback. The pullback held above this important midpoint of the range at this 43.80 level, and that 43.80 level was pretty much also coincident with this trend line. So we had two technical factors that made that level important in the same spot. So we have two different groups of people, trend line buyers and support, midpoint support buyers coming in, defending this market. And now it looks like we're heading for another test at 44.70. We're only 35 cents off the highs basically for the year in this NASDAQ, so it's still very bullish. And I think the next one is probably going to be the one that pushes this market higher, and we probably get a year-end rally. That's what the NASDAQ is looking like. The fly in the ointment continues to be, of course, the financials. If they can't get up and rally and participate, then it's just going to cast a continued cloud of doubt over this entire market and put this scenario in jeopardy. So I went on a little bit more of a tangent there than I meant to, but let's talk also about the Russell, because the Russell, for the most part, still, it dipped down below that 60-80 level, but, look at resistance acting as support. It's not a precise, exact level, but an area of prior resistance tends to act as support. And we've got the same thing in here with these higher lows for the IWM. It's still possible. The scenario that I've been outlining for the last several weeks, that we get a short squeeze higher into the year end, up towards the highs for the year at 62.5, is still, in my mind, a likely occurrence. We've got a rising 10-day moving average that we just found support at. We've got a rising 20 above the rising 50-day moving average. They're all, of course, on a weekly time frame. We're still on a primary uptrend here as well. And we've corrected somewhat through price, but more through time in here. It's still not certain yet, but is this the pause that refreshes, or is this going to be where the market just runs out of energy? we'll know after the fact, but the evidence is pointing higher. I've shown you the cumulative advanced decline line has been making new highs, and today we've got more advancers than decliners once again. We've got right now 1,680 advancing stocks, 1,337 decliners, and that's generally, when you have a positive advanced decline line and an improving advanced decline line throughout the day, that's what makes these little breakdowns that we just witnessed in the SPY fail right now. So, had you been short there, quick stop. Why a quick stop? Because, losing 10 cents sucks, but not as bad as losing 30 cents. But let's take a look now at the... let me just mention a couple of stocks. Let me just follow up on this one stock, and then I'll look at your guys' stuff. Because it looks like this broadcast is keeping up with everything and that. So, anyways, I've mentioned this Astoria Financial a couple times on Twitter today. Actually, over the last week, I've been talking about it. But we've got a nice rising 10, 20, and 50-day moving average in here. And we've been talking about this resistance at $11.80. And I was talking to subscribers saying we wanted to get long basically above 1160, and there's a pretty good sized short position in here as well. Let me see if I can quickly find that and pull it up for you, because I wanted to point something out about that short interest. Is that there's a lot of sites that show short interest. Shortsqueeze.com, someone just mentioned that to me again. Am I aware of that? I am aware, but they just give a straight number. What I like about the NASDAQ.com is that they give these numbers, and you can see a history of the short interest. So you can start to get a feel for what is their, what's their pain level. Where would it really suck for them to be short? So if we look at this history going back to, January, there were about 5 million shares. The shorts built that up to 9 million shares in July. So so from June to July, middle of June to July, they basically added 4 million shares, and it's pretty much been steady through that time. So if we take a look at mid-June to mid-July, what we can see in here is how would you feel if you were short this stock, 4 million shares at least. Right? What we can do is we can take a look at, I'll just grab this and show you that we can go in and take a look here at the volume weighted average pricing tool. So mid-June, right here is June 15th right here to July 15th. The average price in there is approximately $8.37. So what does that mean? It means that they were wrong. And it means that if you're still short, that this 9 million shares is still short. Well, it's got to suck pretty bad to be short, because when you look at this daily chart, we've got, this weekly chart. Let me just change the scaling in there so we can see it a little bit more clearly. Here's the significance of this $11.80 breakout level, and it's, they're still fighting it in here. I've sold some, but I'm still holding a position because I think it's a move that could be similar to what we've seen in breakouts that I was talking about in CENX and also UNH recently. But breaking this level, this 1180 level, where's the next source of supply likely to come into this market? Where are there trapped buyers who are probably looking to get out break even, who are thinking, wow, this really sucks, I need to, finally I can get my money back? Well, probably not up till about $15 a share. That's, of course, if it continues to hold up. For a swing trader, your stop might want to be down near $11.20 a share. Whatever, you have to look at it and say what makes most sense for you. I like bringing the ideas. I trade them my way, and there's no one best way to trade them. But this is a stock in an uptrend that behaves well. So, and like I said, it looks similar to the weekly charts of CENX that I've been pointing out, and also UNH that broke out a week and a half ago past this 31 level, and still looks like it's probably headed towards 33, but just this is probably a little bit of a pause that refreshes in here. And right now, so far, we see that the UNH was up on nice volume. It's giving up its gains very grudgingly in here, and the volume has really trailed off the last couple days. So UNH still looking like a good long candidate to keep an eye on over the coming days and weeks. Let me take a look at the what we've got in here that you guys want to look at, and let's see. We'll start out with Dan is saying check out CENX. It's still rocketing higher, and I was just looking at it. So I mean, I was talking about CENX right here, and again, you know, for me to tell you where I'm getting out of it probably does more harm than good, because I'm definitely still not in this stock $4 later, and it would be nice to, but hopefully you are, Dan. New Jersey Hounds is saying, would appreciate your thoughts on what to expect over the next 2 weeks holiday trading. There's typically an upward bias in the markets because basically any profit taking has been done. What happens a lot of times is that some of the smaller names will rocket higher. You'll get basically a lot of people like us who are just junkies sitting around looking for something to move, and they get hugely exaggerated upside. At the same time, I think that it's a time of year when some hedge funds will go into the market and say, well, I've got 4 million shares of this stock, and there's really not a lot of people around, so I'm going to go in with market orders and, you know, jam this $3 stock that trades, you know, 400,000 shares a day. I'll break it out of that range and get it to trade up so that I can, at the end of the year, my 4 million, you know, so they might have to sloppily buy 500,000 shares to add to get a 30% move, let's say 20% move on a 4 million share position, and they get paid on you know, the profits, the unrealized profits, mark to market based on where did these stocks close this year, December 30th at 1 p.m. Eastern. So if they can jam that stock higher and create, you know, phantom profits, whether they'll stick or not, who knows, they can be a hell of a lot of fun, and it's a tremendously profitable time of year. So some of the thinner traded stocks that are, you know, close to breaking ranges are susceptible to those manipulations, basically by large and it's just hedge funds, mutual funds do it as well, to get them moving, you know, to get those stocks moving, and then you know, and you can hop on that wave, and all the day traders do, and you just get some fantastic movement. So that's what I'm looking forward to the next few, you know, couple weeks during the limited trading that I'm going to be doing. So let's take a look at Hertz. Hertz looks good to me. HTZ, it's more neutral than anything, really, if you look at it. I mean, a lot of these you know, car rental companies have been real strong this year. Hertz has really been the laggard. You look at Dollar Thrifty, and you look at Avis. You know, Avis here, you can see better on the daily time frame, has had a huge rally this year. But Hertz has been the laggard, and but it's holding its gains up in here, but pretty much more neutral than anything. It's starting to look bullish again because we had seen the moving averages crossing back and forth. Now we've got that 10 back above the 20 above the 50, and they're all rising. So I think that it's setting up probably for some further upside, breaking some short-term resistance here. Worst case stop, I'd say down near that 20-day moving average, near about $10.60 or so. But Hertz, you know, it's in a good, strong group, and it's a stock that looks like it's catching up. How about DUSA, DUSA? Drug USA, let's see. What's the average daily volume in here? Average daily volume in this stock is 100,000 shares. So I would just stay away from this. In fact, I might, you know, if it doesn't trade at least 500,000 shares, it's just kind of, I don't think it's really worth looking at. The average daily volume over the last 20 days is 100,000. It's you know, it's stuck below this. You know, ask yourself again, where does it have the potential to go? Where it's likely to encounter a source of supply that'll hold it back, and this, you know, and you're there. So I just don't. DUSA, these are fly-by-night rallies that typically fail. Don't mean to be so negative on it, T-Lento, but I just not seeing it. LXP, Lexington Realty, you know, just another strong REIT. Basically, it's in a steady uptrend here, higher highs and higher lows. It looks like it's probably, I mean, look at these rallies. Look at the recent rallies and pullbacks, right? Draw something like this. Does it look like it's likely to continue to go in that direction, or probably likely to pull back and maybe, so it's in an uptrend, but I wouldn't buy it here because it seems as though this uptrend's getting extended. Probably needs a pause that refreshes, something that brings it back, and then we see another pattern of higher highs and higher lows. So just, I would say the name of the game in LXP is to protect your profits. But you look at this weekly time frame, now I see what you're liking about it, I think, a little bit more. I think another pullback and then a blast off up through that $6 level, you could be looking at $7 a share. So Lexington Property looks good. I'd rather see a pullback and then a rally for a new entry. But if you're in it, then I'd say you want to just protect your profits and see how that does for you. So let's see, Hovnanian. Let's take a look at HOV. Hovnanian is neutral more than anything. I can see why you're interested because of this big volume, but all that did was get it back into this range that it fell out of. So if you look at the home builders, the XHB are also kind of, they broke a downtrend line maybe here. They're in this triangle, this symmetrical triangle that maybe it's going to break out. If the XHB can get going, there might be some further upside in it. Nice squeeze into this market into the close, by the way. So the buyers are still still in control. The financials 1421, they're right at that important level. But back to Hovnanian. Yeah, Hovnanian's back in a range, so I think you need to see that it rallied up on big volume. It's pulling back. It's kind of it probably needs to do some more healing and then break out past $4.50 a share to really become something that would be capable of some sustainable upward momentum. So this Russell 2000 also is behaving very nicely into the close here. We're strong market. What can you say? Can I scale into area? Andy, you can do whatever you want, man, but this thing is looking like a piece of garbage to me. I mean, it's in a downtrend. It's down 7 days in a row. I don't buy them on pullbacks. I'd rather see that like this. It pulls back, it stabilizes, and then it catches some momentum. To me, trying to pick the bottom or find out where it's gonna, and this is just a dangerous stock. Here's another one with these fly-by-night rallies that just fail, and realistically, area is just. You got to be quick in this thing. I wouldn't do it, Andy, but we're below this declining 5-day moving average. Just steady pressure on this thing. Just looks like it's being liquidated into the year end. Maybe it's a January effect, bounce candidate or something. How about McDonald's? Last one. We've had range. It's the most attention. Sell off yet for is low 0910.